Talk about what to do in a scenario like this, if anything. Shailendra Kumar, Director and CEO at Narnolia Securities, joins us right now on the show. Good evening, Mr. Kumar. Thanks so much for joining in. What are client conversations currently looking like, and what's the dealing room feedback? What's the screen feedback? You must have read the screen for so many years now. What is the screen telling you? Is there possibilities of some more downside before some normalcy gets restored?
Yeah. So if you look at from the angle of how the market is behaving right now, next week being a lot truncated and 31st March is also very close. So right now the screen is not giving you any strength kind of a sign. So it will remain something like little volatile surely, but will not have any large pullback I can think of. And people are usually, so those who were not participating in the market last year and was waiting for some kind of a correction, naturally they are smiling faces because now the market has come to a level where the comfort of many has improved vis-a-vis what it was at the beginning of this calendar year. So there's a mixed kind of a sentiment.
Okay. Having said that, I mean, the constant commentary hitherto, Mr. Kumar, was always that when asset prices are coming off, go out and buy them selectively. When you are thinking of buying it for yourself or for some of your large clients, are you now actively placing, rather, what do you call it? How do you call it? Spacing out your buying pattern, even in stocks that you wanted over a period of time? I mean, is that prudent enough to do? We don't really know when the uptick will come about, but it doesn't seem like there is any big reason for the markets to move up in a hurry.
Yeah. So, see, the last year the average price earning ratio based on 1 year forward was about 20 times. And now, right now, if you look at, we are trading at close to 18.5 times 1 year forward earning now. Having said that, this does not mean the bottom is very close, because you can have the price earning ratio on 1 year forward can go, say, to 17, 16.5 also, right? But the idea is those pockets of the economy which are not dependent upon global issues and the things happening around, and there are many to name. Like, so you see, you can think about all the retail spaces, right? You can think about the construction company, the way the tendering has happened this quarter. They are sitting with a order book which will be running, which will give them very clear 2-3 year stable earning trajectory. Many others. So FMCG, a lot of name has come up and the business model has got stabilized for many names. NBFC space, again, you can have a lot of bottom fishing opportunity. Private banks itself, a lot of the name in professional services, gas utility. So there are a lot of pockets right now which would be, which are giving you a good buying opportunity. Maybe the prices can fall from here on somewhat based upon earning multiples. But the idea is like there are a good amount of spaces where the earning trajectory or earning growth will be sacrosanct over the next 4 or 5 years, and that's the space you can go buy one go right now. Maybe a space a little bit if you are a very close market watcher and don't want to see any mark-to-market losses even for a day or a month. But the idea is there are good many spaces where the growth looks very sacrosanct, very structural in nature, and those are the spaces where one should go, because market will not tell you all the good news around and will let you buy. So these bad news happening, global trade stuff, maybe a lot of thing happening domestically in political front, maybe bit of cases around NCLT resolution as well. So these negatives will give you opportunity. Only thing is that you have to look at the right pockets and good stocks in the right pockets which you understand, or maybe you think the earning will be structural 4 or 5 years. So there are spaces for somebody who is sitting outside the market right now to get in and may spread or maybe buy in one go also.
Shailendra, you said private banks. What about the PSU banks where the valuations have corrected a lot? Do you see any opportunity there?
Selectively now I'm seeing a little bit of valuation comforting in one or two name. See, the idea is like what? For all these PSU bank, you have about, say, 9% of NPA. So aggregate loan book of all the PSU bank is about close to 55 lakh crore. So about 5 lakh crore is the NPA. Now look at the NCLT cases. In the the first series and the second series, you have total resolution going on for 4 lakh crore of NPA. And there are just 40 cases, like so 40 cases, 4 lakh crore. Now, the key thing to watch out here is like if you look at how these cases get resolved, the mechanism under IBC actually gets implemented. So unlike a lot of initiative in the past, it doesn't get dragged in the courts and things doesn't get derailed. So if that happens properly, so large part of NPA is getting taken care of. Even the RBI last regulation of stopping all the S4A and the SDR of the previous era, and coming out that if you can't resolve something in a particular period of days, you have to put all the cases in the NCLT, right? Now, even if you take the standard restructured asset which are on the books of these PSU banks, so totaling about say around, so that will be creating about a provisioning requirement of another 1,50,000 crores. Now look at the last 2 years also, the average quarterly provisioning had been around 40,000 crores. So that this new fresh number could easily be taken care by this PSU lender in the next 4 years. So tactically, in terms of appearance of a value somewhere, this year would be some time where you will find some of the really value proposition in the PSU space. Of course, structurally for 5-7 years, we don't see their business improving. So problem getting over will give you a tactical opportunity to ride through some kind of a 50% gain sort of. But structurally 4-5 years naturally is a tough space to be in. But couple of large name like Bank Baroda and all, so where the structured asset, restructured asset is already very small than the pre-provisioning profit for a year for the bank. So there are some value emerging now in PSU space.
Okay, but the PSU banking space continues to reel under pressure, at least in today's session. Shailendra, one pocket, which had a gap down opening and has seen a good recovery is the IT pack. And it's just not about today, IT has outperformed on Y-to-D basis. We've seen Nifty IT giving returns of between 10 to 11%. Do you think at these levels now, should somebody put their money into IT pack or the rally is over?
See, what has worked in the IT for last couple of months, like one, the threat of US administration becoming very harsh on Indian IT outsourcers has receded somewhat, right? Secondly, the kind of a valuation discount these IT companies were trading vis-a-vis the overall market was very high. So a kind of a mean reversion happened there also. Thirdly, if you look at some of these IT names are able to, see the new era of outsourcing where you have to revolve around digital, so you don't have very large deal sizes, and you have a lot of small deals to happen, less number of days to finish off one deal. So they have restructured their business model. So there are three combinations which they are working in. Naturally, there are still some names which has not caught up that much in large cap. You can see, think of SCL Tech kind of a company where the catch up still has to be, so they have not gone to, they have not reverted to the mean as far as the valuation discount goes. So there are a couple of names there also to look interesting. But I think the larger part of the juice has already been taken in the market in the last 3-4 months.
Okay, so Mr. Kumar, what should people do in a scenario like this? Let's say people are convinced that this is a long-term bull market and therefore they should put some money to work in the current market scenario because prices would be much better than what were a couple of months ago or on Jan 29 to be precise. Where is it that people can put money to work? I believe you have some liking for the insurance space individually as well. Is that the only pocket?
Right. No, as I said, see, the hypothesis for investor right now, already, we have less than 10% of Indian money in the equity market. So there's large space for people who are not in the market. Now think of a hypothesis like, in 2 years, where the Nifty earning per share will be. So like, if you go by the consensus, it would be something like close to 680, 690. Our estimate is 643 for now. So if I look at FY20 earning, the P is close to 15 times. Now, at 15 times, 2 years forward, if you're getting something, yeah?
I agree with the thesis. So that thesis I agree with. But now if people are wanting some hand-holding about what stocks or what sectors do experts like you feel money can be parked into, what would you advise them? I believe you have a liking for Bajaj, Finserv amongst others.
Correct, yeah. So in the pocket, if I say there are a lot of spaces, gas services, I said in the beginning, FMCG, construction, professional. We like insurance space a lot. So Bajaj Finserv is one stock which somebody can start accumulating at current levels. The idea is very simple. They are into three businesses, right? One is the consumer credit business, which is Bajaj Finance. then they are into life insurance as well as the non-life insurance. If you look at their, like say, non-life insurance, they are the second highest grosser in terms of premium and the most profitable private insurer, right? In life insurance also, they are one of the most efficient capital utilization insurer, if I can call it like. And in terms of consumer credit, the way they have used the technology, the way the management has built a strategy around, getting a very scalable business model is commendable, right? Now, if you look at the three sum parts, a valuation of something close to 6,100 is very fair for a stock where the management pedigree is very strong and the execution of their plan over the last 5-7 years had been excellent. So that's one good name for an investor to build portfolio or start building portfolio at least.
Shailendra, you mentioned you're expecting an EPS earnings growth for Nifty around 680 or 690. Did I hear that right?
Yeah, so FY 2680 is the consensus number. We are expecting 643 right now.
So is that northwards of 20% growth that you're looking at for FY 19?
No, FY 19, FY 19 numbers are 545. 643 is number for financial year 2020.
For FY 20, okay. Because I thought you were suggesting for FY.
See, the idea is what? The idea is what? Yeah.
Go ahead.
See, the idea is what? See, in the next 1.5 years, we will be close to, say, October, November. See, the idea is, say, in next 18 months, you will be close to October of 2019, right? And October 2019, you will find the market trading on the basis of FY 20 numbers. So that's why FY 20 EPS is important if you're investing for a 1.5 or 2 year time frame.
Okay, Shailendra, there's been a sharper correction that one has seen for broader markets as well. Any individual stocks in the broader markets where at current levels where you see more value now?
Okay, so see, there are a lot of value spaces. I mean, in terms of, say, I said about the PSU banks. So there are a couple of PSU banks, the large names particularly, they have come to a level of valuation where most of the negative which is around, floating around for PSU bank, the macro issues, the P&L issue, or the loan book issues, they are getting close to fair value or less than the fair value levels. The only idea is you have to must make a kind of a list for those stocks which are around that, make kind of a trackable. So as I said, if NCLT cases that is resolving the NPA issue, if there are some kind of a litigation, number of litigation rises and the resolution becomes a lot delayed than what it is expected right now, maybe that's the risk part. But otherwise, if you look at the valuation wise, there are some spaces in PSU also, which is the most beaten down, I think, for the year to buy through. I would say metal again, I'll not be very comfortable because a lot of things floating around, say, so maybe something like a pure alumina exporter, say Nalco, could be avoided. But maybe somebody can start looking at Hindalco because their business is in the US, so that will not be impacted because of lot of tariff stuff. So maybe some pockets there is the larger name also appearing right now. Yeah.
Okay, we will leave it at that, Mr. Kumar. Thank you so much for taking the time out and joining us and giving us that perspective. And well, happy investing is all that I can say. That's the view from Narnolia Security.